But let's now talk about how all of these cues really impact us. We have our research team here to prep you up for this trading session. Vivek, Surbi are both with us. Nigel will also be with us in just a bit. Guys, a very good morning to both of you. Vivek, we were just going through the global setup and we're definitely bracing ourselves for, what looks like a hectic session. But take us through all of the cues that we should watch.
Well, good morning, Pavitra. You're absolutely right. We have to brace ourselves for a very volatile session. Global cues, overnight equity market trends aren't bright at all. In fact, like you mentioned, all of the U.S. markets ended with significant cuts. Along with that, the other key bugbear remains crude oil prices. Crude oil prices yesterday up quite significantly, up over 2% yesterday. So Brent futures now trading over the $90 a barrel mark. But coming closer to the Indian markets, yesterday's session, was the day where we did see significant losses. Second half of the trading session, we did attempt a minor recovery, but it's going to be important to see whether today's gap down opening that is almost guaranteed at this point of time, whether there is any recovery coming in from there. Yesterday, what happened? Nifty breached 19,100 level on an intraday basis. Bank Nifty has now turned negative for 2023. Broader market underperformance continued for the second straight session. The only pocket of trade, that showed some sign of green was actually the metal pack. It'll be interesting to see whether that particular trends continue. Today, a lot of cues are, you have expiry today. Along with that, also remember in yesterday's trading session, FI sell figure was very strong. FI sold over 4,200 crores in the cash market. A lot of results reactions. So Axis Bank, TechM, Jubilant Food, interesting to see how they react to the results. Today, important results in the form of ACC, Asian Paints, Canara Bank, NLC India. All of these companies too will be reporting. Asian markets, GIFT Nifty, all indicating a muted start for our own markets.
All right, and to top all of it, it's expiry day, right? So we should definitely brace ourselves for that volatile session. Vivek, thanks a lot for that. Surbi is also with us to take us through all of the stocks and the big earnings that came through. Surbi, Axis and TechM really top of mind.
That's right, Axis, strong numbers, it beats Pole basically on the back of strong loan growth. Net interest margin has improved to 4.1% versus 3.9% same time last year, and the deposit growth is 17.9% on a year-on-year basis. TechM, it was a miss on both revenue and margin front. Constant currency revenue down 2.4% versus an estimate of 1% decline. Margins at 4.7% versus estimates of 6.3%. Jubilant Foodworks, the numbers are pretty much in line with the poll. Revenue at 1345 crores, margins at 20.9% and PAT at 72 crores. Indus Towers, revenue up 0.8% sequentially, EBITDA at 3,456 crores and margins at 48.5%. Sonata Software, revenues are down 5% sequentially, but margins at 10.3% versus 8.8%. Sona BLW, strong numbers out there. Revenue up 21%, net profit up 34%. Chalet Hotels, again, strong numbers. Revenue up 27%, EBITDA up 48%, and margins have now inched to 40%.
All right, Surbi, thanks a lot for taking us through that long list of stocks. We're going to watch for all of these. We're really in the thick of the earnings season, so there are lots of them to, really focus on. Nigel is also here to take us through with cues from the futures and options space, which will be all important on expiry day, Nigel.
Well, that's right. All important expiry day, and more importantly, whether or not we can, protect that 19,000 odd mark. Who'd have thought? But that's the way trade has panned out in the last few days. Rollovers, if you look at the market wild rollover, or even the Nifty rollover as well, it's more or less in line with what we have seen on D-1, that's expiry, -1, that's yesterday, in comparison to the previous three sessions. So that's in line. What did the FIs do? Well, yesterday they added close to 3,500 short positions. That was added in the ratio of 2 shorts for every 1 long position. And the short positioning is added around 74%. On the option side, well, they bought more calls than puts. So they bought close to around 2 calls for every 1 put. But on the writing side, there was aggressive call writing that we saw. In fact, if you look at the ratio, there were close to around 17 calls that were written for every 1 put. And that's the ratio that comes up for you on the screen. What were they writing? 19,200, 19,300 call, both of them very active in trade yesterday. In fact, we saw an open interest jump up of close to around 2 crore shares on those strikes. So that's something you should keep in mind. What are the levels we're looking at? Since we saw such aggressive writing added on the 19,200 call, 19,250, well, that becomes the first level of resistance. On the downside, 19,000 put has the highest open interest. The premium out there is around 20 rupees. So you want the bulls will want to defend those lower marks. On the technical indicators, well, a couple of them are indicating Maybe in the next few sessions, we should be in for a bounce. Whether that session is today or not, we'll have to find out. But the net short positioning is gradually moving to that 100,000, that 1 lakh contracts. We've seen in the past when it moves out there, we see a bit of a bounce. And the second indicator, since there's so aggressive call writing, the PCR now has moved to the lower end. It's come down to around 0.67 odd. Normally at around 0.65 odd, we see a bit of a bounce that plays out. But this bounce can be tactical in nature. For the time being, it appears they're very much in a sell-on-rise market till we take out resistance levels of around 19,250 and start trending higher. The Nifty Bank, by the way, that's been the sore pocket, and that's very, very close to its crucial support level of around that 43,200 odd mark. Yesterday, in fact, we breached that level, so keep an eye out on that mark as well. Back to you.
All right, Nigel, thanks a lot for taking us through all of those cues. This will be very important to see how the session really pans out. But with that, it is time for our first short break on the show. When we return, like we told you, Axis Bank and Tech Mahindra with the big results post-market close yesterday. We'll talk about the numbers when we come back.